Allow me just navigate you through what has happened in the financial sector, where we're coming from, where we are today, what are the challenges, what is the way forward in light of the topic for this event. So, colleagues, you will all recall with me that Uganda has gone through a lot. We are coming from shackles of financial repression. Financial repression where our nation faced daunting challenges, rampant inflation, a contracting productive base, low tax revenue, and public administration was on the brink. The financial sector was characterized by credit controls, rigid interest rates, disconnect from reality, and severely limited access even to the basic financial services for the vast majority of our people. The financial sector was tightly regulated, heavily taxed, and was more of a barrier rather than a bridge to progress. So, that did not only affect the formal financial sector, but it even came to the very heart of our financial sector, that is the Bank of Uganda. It found its monetary policy, which is really the lever for economic stability, subdued and rendered subordinate to narrow fiscal considerations. It was basically about financing the budget, which led to significant money supply and as a consequence, higher inflation. So, but again, because of the characteristic courage and the foresight and the bold and transformative decision of the Ugandan leadership, very visionary, we embarked on comprehensive programs of pro-market reforms. This was not just a shift, but it was liberation, revolution. And at the time when we were undertaking these reforms, the promise was very clear, very compelling, and revolutionary, that opening up our financial doors would usher a new era of competition, leading to more efficient allocation of resources, greater financial stability, and ultimately improved prospects for inclusive growth across the economy. So the reasons for opening up are well documented, so I'm not going to go through them.
From the heart of Uganda, where every street hums with history and every voice echoes a story, comes a festival that lets the world know of the Pearl of Africa. Uganda Film Festival 2025 is calling. From May 26th to June 6th, cinemas across the nation will blaze with cinematic stories. Watch, feel, and reflect. Then cast your vote for the Viewer's Choice Award category. Step behind the scenes in exclusive workshops and forums. Discover something new. The Uganda Film Market, a vibrant hub for filmmakers, distributors, and investors. The journey climaxes in brilliance at the awards gala. Brought to you by the Uganda Communications Commission. For details, call 0800 222 777.
The journey began with dismantling the archaic controls that had shackled our financial potential. But a pivotal moment arrived in 1992 with the liberalization of the interest rates. This was a crucial step, allowing the true value of money to be determined by the force of supply and demand. And there, banks were no longer having what we call directed credit. You negotiate with the bank and they give you whatever rate you agree on in terms of your savings and in terms of your borrowing. Now, from there, we went to open up the foreign exchange market. And by 1997, Uganda took the bold and decisive step to open up the capital account. And for the reasons that were highlighted by Ramadan, we opened up the capital account because our investment demands were much higher than the savings that we had. So there was that investment gap. We wanted to attract foreign capital to come in. We were told that Uganda is capital and technologically constrained. So we needed to attract that foreign capital to come and try to narrow the savings investment gap. So we believe that actions, if you look at the numbers we have in the balance of payments, has facilitated the attraction of the much-needed foreign direct investment, bringing capital, technology, and expertise into our thriving economy. We also signaled to the world that Uganda was open for business, ready to compete on a global stage based on sound macroeconomic policies. Colleagues, I'll tell you, there is no way you can have an open capital account and you continue pursuing macroeconomic policies that are inconsistent. You'll be punished. So since 1997, when we opened up the capital account, we have been forced to maintain prudent macroeconomic policies to avoid capital flight. Otherwise, we would have seen a lot of capital leave this country if we didn't have strong macroeconomic policies. So, now, the key subject about this liberalization that is still a discussion today, I call it a central challenge and indeed crucible of an invaluable lesson, was the privatization of Uganda Commercial Bank, the largest government-owned bank. There are lots of, opinions whether UCB should have been sold out or not. But from the financial sector point of view, UCB had become a living embodiment of the problems of the past. It was, if we have got to put it mildly, in dire straits. It was technically insolvent, burdened with a staggering 75% non-performing loans, and was overexpanded, plagued by chronic mismanagement and political interference. In fact, many describe it as the biggest bank with the biggest problems. It continued to threaten the stability of the entire financial system. So for us to get the financial system working efficiently, we needed to resolve the issues of UCB. And as a result, UCB was sold to Stanbic Bank sometime in 2002, but it wasn't easy. But it was a crucial component of our comprehensive financial sector reform. It was a monumental shift to turn away from the long-standing liability into a dynamic bank. Government was putting a lot of money to cater for the huge non-performing loans in UCBL. And as a result, we were pumping money into circulation, which resulted in very high inflation. And the problem of the mismanagement could not be sorted out. Yes, it was said that when you liberalize UCB or when you privatize it, the lending rates will come down. That did not happen. And we will, from our analysis, we will show, we'll try to show why it didn't happen. But ultimately, the turnaround of UCB, selling it to Stanbic, was important in that the bank that bought UCB Stanbic managed to turn into a dynamic, market-driven player that now effectively supports government financing needs. In the past, government was giving money to UCB, financing UCB. But now Stanbic Bank occasionally comes in to support the government budget. So in terms of financing. So that was one benefit. Now, when we come to today's realities, interest rates are very high and really high. That one is, nobody is contesting it. And indeed, one of the reasons advance for selling UCB was that the lending rates would come down. Unfortunately, they didn't come down. We are trying to establish why didn't they come down, using what we have today. That were the conditions that we had today, were they prevailing in the past? Because UCB had huge non-performing loans. That's why the rates were high. But today, if you analyze why the interest rates are high, it is really basically because of the high overhead costs, the huge government borrowing, the market structure, the continued non-performing loans that we have, the structural constraints such as credit, poor collateral, and then the mismatched financing. A number of well-intentioned Ugandan entrepreneurs have been looking for long-term finance, but there is no institution apart from UDB and maybe UDC that can give long-term finance. But the demand for this long-term finance is of overwhelming the available credit there. So they go to commercial banks. Commercial banks are development financing. Commercial banks mobilize their savings, deposits at the short end of the market. So if you're an entrepreneur, you need a 10-year loan to break even. So you cannot take the interest rates of a commercial bank to finance a 10-year project. So your rates that you face become very high. And that's why you have a number of well-intentioned entrepreneurs having challenges today in terms of repaying those loans. So why am I bringing all this? I am bringing all this because we are now going to ask ourselves, going forward, in the context of socioeconomic transformation, in the context of the tenfold growth, what do we need to do as a central bank to address these challenges that we have identified? So, before I get into that, we need to secure the foundation. And securing this foundation means that we need to maintain price stability, we need to maintain financial stability, and government has got to undertake fiscal discipline if we are going to go ahead. So as a way forward, in the central bank, we think that deeper financial markets, unleashing the power of domestic capital is very, very important if we are going to finance the tenfold growth.
From the heart of Uganda, where every street hums with history and every voice echoes a story, comes a festival that lets the world know of the Pearl of Africa. Uganda Film Festival 2025 is calling. From May 26th to June 6th, cinemas across the nation will blaze with cinematic stories. Watch, feel, and reflect. Then cast your vote for the Viewer's Choice Award category. Step behind the scenes in exclusive workshops and forums. Discover something new. The Uganda Film Market, a vibrant hub for filmmakers, distributors, and investors. The journey climaxes in brilliance at the awards gala. Brought to you by the Uganda Communications Commission. For details, call 0800 222 777.
We're looking for resources to invest in serious infrastructure, in roads. You're looking for resources for irrigation. You're looking for resources for manufacturing plants. You need to have a deeper financial sector to finance this. When our financial sector has deepened, it is not deep enough to finance the kind of investment that we need to undertake. So, in other words, we need to unlock longer-term financing. And how do we unlock longer-term financing? The first issue here, we need to deepen our financial markets. A well-developed financial system is instrumental to sustaining the tenfold growth. So it helps in mobilizing savings, facilitating the exchange of goods and services, and allowing, of course, risk diversification. So Uganda has made significant progress. Today, our financial markets are ranked the 4th best in Africa, moving from 10th position in 2020 today to the 4th position. But that's not enough. It is the best based on shallow markets. So we are working to see how we can deepen those markets. Now, we are thinking that there are certain issues that we need to have a conversation about. How do we unlock long-term financing? The aspect of pension sector reforms. We need to have a deeper conversation on pension sector reforms. We tried it before, it was not successful. So, but we can't run away from it. Government on its own cannot finance the full agenda of the tenfold growth. We need the private sector to come in. But for the private sector to come in, we need to give the private sector long-term financing. And the current arrangement now is we don't have enough of it, apart from the little that is given to UDB and UDC. So colleagues, let's have a serious conversation about pension sector reforms to unlock long-term financing to support the tenfold growth. We're also working on broadening the various instruments. For example, we are working together with the key stakeholders. We want to introduce bonds such as sukuk bonds, infrastructure bonds, green bonds, diaspora bonds, so that all this kind of financing is mobilized going forward. And also, we are working together with the Capital Markets Authority in the amendments of their act to see how we can introduce futures contracts for both agricultural and mineral commodities. Because if you are talking about agro-industrialization, about mineral development, you also need to look at what is the financing. Do we have markets? Do we have some capital markets for this? Do we have commodities exchanges that are going to promote the trading of these, these commodities? in order to support industrialization, in order to support their exports and value addition. So those conversations need to be taken forward. And then the other thing that we're looking at the central bank is smart resource allocation. How do we drive capital to the growth areas? We need to strategically identify the areas where we think our money should be going. Because without a strategic direction, capital cannot just go anyhow and you expect it to deliver results. So in the case of Bank of Uganda, we have been focused, we have been supporting government in the agricultural credit facility, in the small business recovery. And here we are talking about successes. We have developed a partnership with government and the private sector. And all that we require here now is how can government at least double the capitalization of this? Because we have seen tremendous success in terms of commercialization, in terms of value addition that we have managed to realize from this. So why don't we grow on that? Why don't we increase the capacity of doing that? Then also there are others like we are working with to promote public-private partnerships to demonstrate the immense potential in this. We have shown that we have a system in place. So we need to direct capital to these engines of growth and address the issues of socio-economic transformation. Remember, Bank of Uganda just a few years ago had to change its mission statement to move away from promoting price stability and a sound financial system. We added in support of socio-economic transformation. So what have we done in terms of promoting or supporting socio-economic transformation? We have promoted financial inclusion, because if you look at how financial technology through fintech has revolutionized the use of finances at the bottom of the pyramid. People deep in the villages there now have access through mobile money. So we're saying, how do we use mobile money to grow things like savings, credit, and insurance? The numbers on credit are showing that close to 1 trillion shillings has been extended in form of loans to the people at the bottom of the pyramid. But again, these are just short-term loans to facilitate trading. But how can we use that as a tool to bring these guys into the money economy? We are also looking at environmental, social governance integration with the commercial banks. Because we are telling the commercial banks that you can only become sustainable if the environment that you are working in is sustainable. So we want to see how they are participating in financial inclusion, environmental protection, because Uganda is an agricultural economy, rain dependent. So what are you doing in terms of ensuring that our environment is secure? So we think that this ESG that we've launched is one way to get down to the bottom of the pyramid. Also, we are working with the investment of industrial transformation and employment and invite program in partnership with the Bank of Uganda. The Uganda Bankers Association have mobilized about $300 million, which they are looking to de-risk. So we are looking for how do we de-risk this money. This is meant for regional export facility. It's going to address all the value chains for those products that are exported in the region. So not only are you going to address the value chain, you are going to support the commercialization of agriculture, the value addition, because this is about light manufacturers in the region. So these are some of the things that we're doing. And also, as a bank, we are going to start purchasing gold. We are going to start purchasing gold from the local artisans. Why are we doing this? Again, for the issue of a disrupted world. For long, we have been relying so much on portfolio flows, on balance of payments to build our reserves. But recently, we have been challenged by this disrupting world. We can no longer build reserves to the extent that we want. So we're looking at what is a sustainable way of building reserves. We have significant amount of gold deposits. How can we get that gold, add value to it, make it become monetary gold, so that it actually goes into building reserves? So once the program kicks off, and very soon, we are going to address 3 issues. Socioeconomic transformation by looking at those local artisans in the village, small micro enterprises that are involved in gold mining. We are also going to utilize the capacity of the gold refineries to refine the gold to Monterey gold. And then we'll use that gold to diversify our reserves. So these are some of the contributions that we are going to make towards socio-economic transformation. And then we need to harness digitalization for inclusive growth, because the future is now. So all these aspects, particularly through the National Payment Systems Act, have been helpful in ensuring that the growth of digital finance has increased. We know the risks that come with it, things like cybersecurity, but we are addressing those. So we see overall progress and a future outlook. So what's our vision of prosperity? So despite all the financial market development challenges, including formal financial exclusion and limited access in rural areas, about 31% of the Ugandans are still living in a financially excluded environment, still surviving in agriculture. Efforts are continuing through multiple fronts, including PDM, to ensure that these guys are brought into the formal financial sector. They're able to generate aggregate demand. They're able to increase on their output, on their investment, and they become part of the money economy. So this commitment to responsible and sustainable growth is part of the vicious circle. But we need, of course, a stable macroeconomic environment to continue. So the consistent economic growth we have enjoyed for 2 decades, coupled with rising private investment and improving export diversifications, provide us with a solid foundation. So we need to order our footsteps now to ensure that we continue with this. So in conclusion, our commitment, our mission, and our moment. We've come a long way. We have to liberate our financial system. We have to boldly break free from the shackles that are still holding us back. So today, we choose to focus intently, strategically, and with unwavering resolve on transformation. We need to transform if we have to achieve the tenfold growth. So economic transformation is not and never can be solely a government project. It involves every Ugandan, including the private sector. How do we strengthen the private sector to become part of this growth? Every mobile money transaction that connects a remote farmer to a distant market, every business that enables a young entrepreneur to turn an idea into reality, every pension contribution will build towards the future. Each of these actions are, although they look small on their own, they're vital bricks to help us have a shared prosperity. So our journey has been one of change, from financial repression to true financial liberalization, and from shallow, fragmented markets, we are hoping to deepen these markets going forward. We've laid the foundation. We now have to diligently build upon the structure through transformation, and tomorrow we will be able to see the fruit that we want by supporting the tenfold growth today, by supporting socio-economic transformation, and we think that we will prosper together. So this is our commitment, it's our mission, and it's our moment that we need to seize. I will address the other issues on a disrupted world later on because of time. I thank you for your kind attention. Let's give our governor a better clap as he takes his seat. Just 1 second.